Bitcoin as of right now is not only at a 94% discount to the true valuation that I think Bitcoin will reach with $1 million per coin, but it's also, when you look at the Bitcoin valuation score from Nik Bhatia, 85% cheaper to buy Bitcoin right now than its entire history of Bitcoin. And at the same time, where Bitcoin has such a low valuation, is so cheap to buy, and has a 40, 35, maybe even 45% CAGR over the next few years, the AI stocks, the semiconductors, and the new IPOs are extremely overvalued. That's why I loved talking today with Nik Bhatia, one of the OGs in the space. He did already his research multiple cycles on Bitcoin, has amazing valuation metrics for Bitcoin, and we are talking today in depth about the value of Bitcoin, about why it's inevitable to it going to $1 million, and why everything else is valued the way it is. Enjoy. Everyone that I know that is super informed and knows Bitcoin at a very deep level, they're very excited about that. They're very excited about this current Bitcoin market. And then I see all my YouTube comments and my Twitter feeds, and I'm like, oh yeah, people are capitulating. They are mad. They are really like, what's going on? I was promised this 250K, 400K, $1 million price target, and it's now we're like at 60K, like we have been 4 or 5 years ago if you pick the top and now the local low. I mean, that's cherry picking, but people still do that. What's kind of your response to people that are a little bit, maybe even almost angry at Bitcoin that it didn't perform as they were once promised that?
The older narratives about Bitcoin continue to either fade or evolve. And I think that's something that people that are newer to Bitcoin should understand, that they might have been sold the wrong narrative. People that have been around a while, hopefully they understand that narratives do change, and you have to embrace the current, or you have to be conducting analysis, and you can't anchor. I think that's what gives people some of this anger, is that they're anchoring in a thesis that says Bitcoin should hit this level in this year, or it shouldn't be drawing down by this much, or it shouldn't go below the previous all-time high, or it should never be negative on a trailing 5 years basis. Well, all of these things have been violated. The 2017 high, all-time high, and the 2022 FTX capitulation low violated the trailing 5-year thesis. It also it violated the Bitcoin doesn't go below the previous all-time high thesis. And here we are again. We are almost at a negative trailing 5-year return on Bitcoin based on certain, time horizons. If you look at where Bitcoin got in 2021 in the middle and then at the end of the year. And it also is suffering what appears to be a huge defeat relative to the AI trade in 25 and 26. All of these things are making people angry. And I understand that, but I'm also a technical analyst, so I can see behavior on a chart. I can see greed. I can see fear, capitulation. And when you've been in Bitcoin a while, you do understand how to pick these things up in the chart. So I sympathize, I empathize with those that wished Bitcoin would be higher. But for someone like me who's been researching this asset for a long time, I have to conduct the analysis today. That is my thesis on Bitcoin firm, or is it being diluted by something else? And I always try to play devil's advocate with my thesis. I think that's important. It's part of it being a good analyst. And so what I've speculated to myself and to my readers over the past 6 months is, hey, What if Bitcoin stagnation here is a result of the dollar system re-strengthening? So if you were getting long Bitcoin over the past 5 to 10 years because you saw the dollar system diluting itself, money printing everywhere, bank bailouts, fiscal deficits to the tune of $10 trillion over the course of 5 years post-pandemic, these are all reasons that you'd want to own something that benefits from money printing. But what if the opposite is happening? Shouldn't you be rolling back your pro-Bitcoin thesis in light of a strengthening dollar system? The dollar getting stronger, the debt to GDP not climbing higher, as it has not climbed higher for 5 years now. It's leveling off. These are all. Oh, and what about interest rates being not at zero anymore? Well, Bitcoin did very well with rates at zero, but what about rates at 5%? What about 4%? Is Bitcoin meant for that? Maybe it's not. So I want to always present the other side of the argument to, for people that are angry. You can even pile on to that anger that, hey, not only is Bitcoin not doing well, but it might not even fit the same role in global macro anymore that you thought it did 5 to 10 years ago. The people at the end that are left over and are pro Bitcoin or advocating for Bitcoin in a portfolio, that's us. Now it's just people like us. And so then I ask myself, would you like to own Bitcoin today at $70,000 or sell it for IPOs that are going to hit the market this year, and or sell it for the S&P 500? And when I conduct that analysis, I still end up on the Bitcoin side. So to answer your question, it's okay that people are angry, but what would I tell them? I would tell them that my analysis still values Bitcoin as an excellent asset to own over the long term, because I feel that overall credit creation of the world's fiat system is not slowing down.
Yeah, and it can't, like over the long run. I think like it just like has to run. I'm curious because it was just a couple of days ago actually, when this comes out, maybe already a few weeks, the SpaceX IPO, and so many people are interested in that SpaceX IPO. I want to get your thoughts on, because when I look at that, I'm like, I see a company that is not profitable, that is already the 5th biggest stock like a week after IPOing. And I'm like, why are people piling into that? Like, even if you think about it logically, what is the total addressable market for a stock? Like, you being the number one stock is, for me, is like the logical reasoning. It just has a 2x from here to the being the number one stock, or maybe a little bit more, little bit less, depending on what exactly the market cap is now. But it doesn't have that much run rate to being the biggest just a couple of days after the IPO, and people are piling in, the same as like everyone seems to buy Nvidia now. I don't argue that like 10 years ago it would have been an amazing buy. Even 5 years ago, Nvidia would have been an amazing buy. But it seems to be like people have that amazing ability to buy the top and this very horrible ability to buy something when it's like laying on the ground, it's bleeding, it doesn't look very attractive, it needs to be picked up again. How do you look at like everyone piling into like SpaceX and the other IPOs that will probably come this year, versus Bitcoin seems to be like an amazing value and has way less risk and way more upside than those stocks, and they like, I don't touch it, like I don't like it.
Let's start with Nvidia instead of SpaceX and Bitcoin, which I'll get to. But I want to start with Nvidia because it's important to discuss it. Nvidia is the largest company in the world today by market cap, and its earnings and revenue growth are off the charts, as well as their profit margin. So it has earned its spot as the number one equity by market cap, I believe, and it's probably still an excellent buy today, looking forward over the next few years. This is not an investment recommendation for NVIDIA. I personally don't own individual tech names. So, that's the disclaimer here, is that I'm not long NVIDIA. So I'm long US stocks, broadly speaking, as a basket. So NVIDIA, not only is it earned its market cap, but it's also probably cheap looking forward. It might not be cheap for today's valuation, today's revenue, today's earnings, but looking forward 2, 3, 5 years, it's probably still a very good buy. It probably has a lot of room to run. I would echo that with some of the other large tech names, the AI hyperscalers, however you want to call them, anybody involved in the data center economics, whether on the chip side or the housing side, the cloud side, all the typical names are in there. And they're all mostly, to me, probably still good buys looking a couple years forward. On the SpaceX side, I would say that SpaceX at 2 trillion is probably also a really good buy, but how many years forward? And that question, there's no way I can answer that. I'm not even going to try. So when people bid up the IPO in its behavior, this is classic behavior. So there's an idea that's very popular and is likely to grow, or a business line that's likely to grow and grow and grow for years to come. And then that growth, people look forward and they price in that growth and they bring it back to today. And they say, well, I would love to own it, in 5 years, 10 years, I think it can make all this money. So I don't mind paying hundreds of times earnings or 100 times revenue. I don't mind paying that today, because eventually this position will work out. We saw this in Facebook's IPO. We've seen this in many IPOs over the years, where the initial hype is so much, people rush in, and then insiders dump because it's too easy to then monetize new wealth. We see SpaceX immediately go out and buy Cursor for $60 billion. It's an all equity deal. They don't have to spend a dime on it. They just print their stock and send it out. And in that way, they acquire this enormous asset for free. And it is for free because they just print the shares. So yes, they dilute the existing shareholders, but they acquire the asset with the new paper wealth that they have driven up for themselves. So what do I think about people piling into the IPO? Classic herd mentality behavior. Those that are doing so knowing that, hey, I'm not going to trade this for 5 years. Maybe when it goes down in a year, I'll buy more. Maybe it won't, and I'll just ride the position out, but I'm comfortable to buy it. Then you have a cohort of investors that says, SpaceX is the hottest IPO of all time. I'm going to chase returns, and I'm going to leverage long. I'm going to do whatever I can to ride the Elon wave. I saw what happened in Tesla. I don't want to miss it again. I'm going all in. And if they do it with leverage, there's a high chance that they'll get completely wrecked, taken out of their entire position, and obliterated by the market and basic behavioral tendencies of a bubble. So the reason I start with NVIDIA, Robin, is to show you that I don't think AI is a bubble. And I don't think the US stock market is a bubble. I don't think Nvidia is way too expensive. SpaceX will join that cohort or is in the process of doing so. So it will dilute the value a little bit in the short term of what you're getting when you pay for US technology companies, because Nvidia, you're paying 20 times sales. I'm making a number, but it's somewhere around there. You're paying 20 times sales. For a few of these other companies, you're paying 3, 5, 7 times sales. I'm thinking about Micron or even Amazon. You're not paying that much versus sales. And then SpaceX, you're paying 2 trillion for 20 billion in sales. So there's obviously an enormous delta between the established companies and the new one. But it's not, to me, the SpaceX chase is not the sign that we are in the late stages of an AI bubble. It's actually evidence to me that we are in the early stages of a continued capital cycle. Because if you see the way it performed in the first few days, it means the appetite was so large that it can't find its way into the capital. And most of the sell side is still locked up. So the people that actually have the shares, they cannot sell the shares. They can't monetize their wealth yet. And so you get this technical dynamic that drives the price up in the short term. But I do believe that the price is reflecting overall supply of capital that wants to come into this market. Bitcoin doesn't have the revenue or earnings numbers to associate it with it. So it's just a commodity. And when you're looking at just a commodity in a world in which everyone is obsessed over future revenues, it makes sense that Bitcoin is being shunned. Because when did Bitcoin do well? When the economy was flatlining at 2%, money printing was still going, rates were still zero, and Bitcoin got all this energy. Is like, what else are you going to own? Own Bitcoin. ECB deposit rates are negative 40 basis points. Why wouldn't you own Bitcoin? Even Elon said that. I can't remember. I think it was maybe his Tesla Euro balance at some point. He says, why am I holding Euro at the bank at negative 40 basis points? I'm just going to buy Bitcoin with it. So the opposite is now true, where you have 4 or 5% hurdle rates on the risk-free side. US Treasuries, even German bonds are at 3%. So you have nominal returns. In many ways, there are also real returns, because if inflation is at 3 to 4 and rates are at 4.5, that's still a positive real return on your capital. Then you have double-digit earnings growth at the S&P 500 level. And I'm actually being modest. It's closer to 30% earnings growth at the S&P 500 level. So why wouldn't you want to own equities that are benefiting from an explosion in present and future cash flows? Bitcoin doesn't look attractive in that environment. And so it is hated right now. That's not me saying that Bitcoin isn't cheap or that Bitcoin is still expensive. No, actually, on a historic basis, Bitcoin is very cheap. It's bloodied, like you said. And that is an attractive time to buy an asset class if you understand what Bitcoin is and its role. But broadly, are people attracted by Bitcoin just because it's below 70? I don't think so, especially when the alternative is all these companies that are changing the world very rapidly.
Yeah. And it's fun because I almost forgot about it. Like SpaceX, with that, it also came out that SpaceX owned 18,000 Bitcoin.
Yes.
Which we kind of knew before that they're holding Bitcoin. I think this was like kind of rumored. I think it was not confirmed. I'm not sure about that. But it came out, and now it's in the filings. And now SpaceX is a publicly traded company and is in the list of the, I don't know, top 10 publicly traded companies that hold Bitcoin, which I think didn't get any attention. I didn't hear any. I saw Michael Saylor tweeting once about it, and two other people, but it's it's almost a forgotten news that SpaceX, one of the biggest companies on planet Earth now, like the fifth biggest ones, holds 18,000 Bitcoin. I think it's a tremendous story. I personally think for Bitcoin.
Yes, and I've actually written a report. I'm publishing it soon. And in this report, the opening thesis here, because it's a Bitcoin and AI investment themes report, that the opener is this idea that you have the most successful IPO of all time, which is in part an AI company, owning 18,000 Bitcoin. It tells you where the capital is and where it's going today. And, in terms of the investment themes for people to take away, it is AI and Bitcoin. This is where the money is, I think, best situated. Where is it flowing right now? It's flowing to AI. And flow is the determinant of price. It always has been. And so Bitcoin's price is suffering because its flow is suffering. But when its flow turns back on, you'll see the price rise again. And for us to know when that happens, it's very difficult. But I have speculated of late that the energy won't come back until the IPO wave has resolved itself. There's too much appetite. There is too much appetite. I said too much appetite before the SpaceX IPO, but the post-price reaction shows you the appetite is crazy. And I didn't buy it. I can't justify that valuation, but I do have, I do have a healthy, positive outlook and allocation to U.S. equities broadly. So I will end up owning SpaceX through my exposure. That will happen naturally. That doesn't mean I'm going to be the one chasing that ticker on an individual basis. And I do feel, this is my opinion now, I do feel that SpaceX will show that, insider dump, and that people that bought day one will be underwater for weeks or months until it comes back. So that's, my baseline expectation. And who knows what individual investments that I'll make, going forward. But I do like to be transparent with people.
I like that also. I like that. That's really cool. Yeah, SpaceX is an interesting one. There's actually, before I came into Bitcoin, I was big in stocks. And so I studied IPOs a little bit, and a lot of them are actually down over the first year. If you look at them, like how they perform, they usually have some hype in the beginning, and then usually they tinker off. And that's what I hope, actually, because I'm a huge SpaceX fan. I just can't buy it at such a high price. It's like the reward is not as tremendous as I want it to be for the risk that I'm taking. But if it falls 50, 80%, not saying that it will, but if it falls attractive valuation, I'm like the last person that says no, because I'm a huge Tesla and SpaceX fan. It might be controversial even to say that in the Bitcoin space, because, but I am a fan of what Elon Musk is doing. I think he's also a very silent Bitcoin. I don't know if you have a take on that, but both his biggest companies are owning Bitcoin. I think he owns a significant amount of Bitcoin. People just hate on him because he also promoted Dogecoin. I think that's the only reason.
Yeah, and I think people have to take everything he says with a grain of salt, but he is a genius. I like to remind people that he read every book in the South African library near where he grew up by the age of 10 or 11 years old. I can't remember, and made them buy new books because he had read them all. And he has changed so many aspects of our lives already in only 10 to 20 years of entrepreneurship. He also, so I'm a fan of Musk. I do think that he's a Bitcoiner. I actually know he's a Bitcoiner because he understands how it works. He understands the chain of blocks and mining proof of work and the energy security behind Bitcoin. So those are all important things. And when he gets into his Doge mindset, or I wouldn't even call it promoting it, but when he starts to talk about Doge, or when he starts to introduce this idea, it's not him being an anti-Bitcoiner. It's just him understanding technology really well. That doesn't make him your investment advisor or some grand monetary theorist. It doesn't. And just because he says, hey, you should use Doge for small transactions because the blockchain isn't busy, he's not wrong about the chain. He's not wrong about the cost. He might be wrong to you in that, hey, you shouldn't be recommending people use Dogecoin because that's not a network that will last or be able to secure itself over the long term. That's fine. So I would take what he says about Doge with that grain of salt, that yes, he has 18,000 Bitcoin on his SpaceX balance sheet. So I think that's very important for people to understand. And, on a personal level, in Southern California, we get to see his launches on a somewhat frequent basis. And, we go outside. My daughter is 8. We go out and we watch it, or sometimes we're on the way to or from dinner and we look up and there's this rocket flying across the sky over greater Los Angeles. It's not like we live in some suburb. We live in one of the biggest cities in the United States, and with bright, city lights, yet you see these rockets go up to space and you can't help feel inspired. So, I'm a big Musk fan. I'm like you. I think that, these equities would be awesome to own. Actually, I thought about a huge position in Tesla back around the time when I became a Bitcoiner, because you're trying to chase returns as a young person. You're actually trying to take risk. You're trying to take that risk and allocate your capital accordingly. So it'll be interesting to see how SpaceX, the IPO, plays out. I've seen similar analysis to what you said about performance in the first year. And who knows, maybe people will get a chance to buy. And maybe Bitcoin won't be able to attract its bullish energy from the rest of the world until some of these IPOs have passed.
Yeah, I think we need the IPOs passing, then maybe the people exiting their positions, how do you call the insiders, the people that have the wealth, that want maybe some exit to liquidity, that sit on a bunch of SpaceX shares and would love to capitalize them at some point. But yeah, I'm actually, it's fun that you say that. I don't know what time it was, but Tesla was kind of my origin story to investing. And I think I bought when I became 18, 19 years old, because then I was allowed to trade stocks in Austria. Before I wasn't allowed, even though I wanted. And it was around 2016, 17-ish. And it did very horrible in the first half year, but very good then after that period. So I can relate to that. And it's also funny because it was also the period where he said, I'm taking Tesla private at 420. And it's coming back up to 420, even though they had stock splits in between. So like I'm hoping for that Tesla 420 price meme coming again. We're like literally $15 or something like that away from it. So that's just a small fun fact from the past.
Or maybe SpaceX absorbs it.
Yeah, SpaceX, what is it, 200 something? So it's like a 2x from here to get to the 420.
Yeah, and when you think about the way that he rolled Twitter into SpaceX, and the way that he's rolling robots into Tesla, you never know what this guy is going to do, and you really can't rule anything out. It's very interesting how when I remember back on the initial speculation that he was going to buy Twitter, I was in the camp that just said Elon will say anything. It probably doesn't get done, but I'm done discounting Elon Musk.
Never bet against this guy. He makes things possible. Like he can shoot up a rocket in sky, like and land it on a floating thing on ocean. Like it's like ridiculous.
Now I've never seen the landings, but I've seen plenty of his launches around here in Southern California. And if you haven't seen one, you gotta check it out. It's the best.
I have to see it. I've only seen videos. I mean, it's quite far to travel just to see the launch, but I hope I can connect it with something because it's already on video, so impressive. And I know seeing something in real life must be like 100 times more impressive just to like see this thing.
And
It's like a tower, right?
Yeah, and I haven't seen it actually up close. Like I haven't seen it launch off of the ground. I've only seen it once. It's a couple miles in the air, and even then, it's wildly impressive. And you don't want to. I don't want to be in a world where we can't acknowledge these things. Like, what is this? What is this bickering about his trillionaire status? It's obscene, actually. The value that he's creating and the innovations that and his wealth is mostly paper wealth anyway. I mean, it's just the valuation of the equities. He's just a very impressive person, and I think that his inspiration to young people, the scientific community, the rest of the world is by itself worthy of his trillionaire status.
Yeah, I think that pickering usually comes only from people that don't understand fundamental economics. It's like of course he has money, but if you think about the wealth that he created for other people, the massive wealth and innovation that he created for everyone on planet Earth, and the things that he's done, I don't know, like it's such a weird thing to like to pick. Like there's just people that want to pick fights. I think it's just nature of social media. Mostly those people in real life are more relaxed and chill. Even though I've already met people in real life that hate on Elon Musk, which is always a fun experience. But yeah, I don't know. I think it's mostly envy. I don't know. They
Robin,
don't do anything in their own life.
We have a lot of people driving their Teslas around Los Angeles with a bumper sticker that says anti-Elon. What does it say? Anti-Elon Tesla Club. And it's a very popular bumper sticker. God bless them.
Yeah, or the Tesla, the bumper sticker. I bought this Tesla after Elon went crazy. You gotta love this one because it's like if you really think about it, Elon Musk didn't really change his opinions. Like he didn't like. I listened to a lot of his interviews over the last 2016. I kind of started, so that's now. Oh gosh, that's now 10 years. I'm literally constantly watch his podcast interviews since 10 years, and I haven't really seen a massive change in like he has done something like he has become more popular, he's become more influential and like more successful, but he didn't really fully change in any direction. And so the only thing that changed is how people write about him. I don't know if sorry for telling that story, but like I've owned a Tesla in the past, before the Trump thing, before all of that, and people thought I'm a lefty, I'm a green guy, I'm like an economy guy, like that cares about forests and all of that. Now I also own a Tesla again, but I had a big break in between. I just got the Tesla this year, and now people think I'm a right wing, like all of that. Like it's so interesting. It's the same guy with the same beliefs, the same car, everything is the same. It's just people write different stuff about him, and it's like the herd mentality. I'm like, oh, I guess now Elon is bad. I was like, who did that switch? Like, I don't understand that whole economics.
One of my favorite things to say to people is, who told you that? like who told you to think that, or who told you to say that? Because that can't have come from you. It doesn't sound like that's your thoughts. So I'm interested into who told you that, or one of the it's like the water usage for AI. You're talking about, oh, I'm really, I'm using Claude a lot and it's helping my business. Oh, well, what about the water usage? I go, who told you to say that? So it like you said, the media, that's why we have these conversations, is because the media doesn't get to tell people what to think anymore broadly. People can think for themselves, and that's why this format is important. I drive a non Tesla electric vehicle and have solar panels on my roof, so I charge for free at home. And that doesn't make me a lefty, a righty. Maybe it makes me a smart consumer and someone who operates in a capitalist system.
That's very true. It's such a fun thing to think about. No matter if you already have self-custody or still have your Bitcoin on exchange, your generational wealth that you have in Bitcoin could be completely at risk. And that's why I highly recommend to you to give the Bitcoin Way a 30-minute free consultation call to check how secure your custody setup really is and what you can still improve. So head over to thebitcoinway.com/Robin. Again, that's thebitcoinway.com/Robin, and get your free initial 30-minute call with the Bitcoin Way. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. But maybe back to Bitcoin. For the people, that's actually, I wanted to get that earlier in, but the SpaceX and Elon Musk thing distracted me, but it was really fun to talk about that. For the people that are now looking at Bitcoin and they're like, okay, it's down, but where does the confidence come from? Like, where do you get your thesis of like, because I think you said like, oh, like it's going to 1 million, it's going to higher prices, we'll get there, it's a power law. Where do you get that like confidence of Bitcoin when there is so much blood and like so much disappointment in the market?
Yes, this is a very good question. This is where you have to use your qualitative assessment to the best of your ability, because on a quantitative side, for you to expect it to go back up just because it's waved up and down in the past is, I think, an incomplete analysis. You have to have some reason that you expect it to go up. So you mentioned power law. You mentioned adoption. I'm not sure if you said the word adoption, but power law is adoption. It's a play off of, as time goes, the number of addresses grow, and as addresses grow, the price of the network grows because it's more valuable having more people a part of the network. So I believe in this power law, but it anchors in adoption continuing and adoption to be strong. And all of the adoption anchors in the asset being good and a good asset to own. So where do I get my confidence? Qualitatively, if you look at the new class of owners of Bitcoin and the power to hold or the desire to hold, I'll just point out a few participants. SpaceX, we've mentioned 18,000 Bitcoin. The Abu Dhabi Investment Authority and its sovereign wealth fund branches are owners of IBIT. Not only are they owners, but Larry Fink let it slip on stage several months ago that Abu Dhabi and Qatar, he didn't say it in those words, but that they're buying the dip of IBIT. And then if you rewind another 6 to 12 months, we got the IBIT holdings reports, right? Because as the companies or the participants own more and more shares, it all gets into disclosure realm. We have Midwestern pension funds and Harvard becoming large owners of IBIT. So in the beginning, if it was guys like you and me, and now it's Abu Dhabi, Harvard, Fidelity, BlackRock, SpaceX, then what is the path? What is the evolution and what is the direction of that? And directionally, oh, and let's not forget Morgan Stanley now filing for its ETF so that it can plug and play that vehicle into its multi-trillions of 401k money in the United States. And by the way, that's on a go forward basis. We're going to get that. So price can go down, but where is the interest? And who is bailing out? Who is leaving? You don't see any of these participants that I mentioned leaving. They're actually arriving one by one and slowly. Then you have some language around Scott Bessent, our Treasury Secretary in the United States, and some conversations I was privy to in Washington. People are interested in this administration in a strategic Bitcoin reserve, but I'm not actually even factoring that in to my confidence or my bullishness in this asset class over the long term. The participants are arriving and they're starting to allocate in larger and larger ways. And that's what makes Bitcoin a really good digital gold. And not, I've said for a long time, Bitcoin did not achieve $1 trillion market cap by being a very popular medium of exchange. And it won't achieve a 10 trillion market cap by being a popular medium of exchange. It has a medium of exchange function. And actually, this is what's funny and ironic about some of the Bitcoin debates or labeling or narratives. Bitcoin literally does not work if you cannot send it from point A to point B. Therefore, it is an exchangeable asset. You can transact it. It is a transactions network and it's a transactions protocol. And the way that the blockchain works is that each block has the next set of transactions. So it's hilarious how people are like, well, it's not a great medium of exchange. It's a good enough one that you can send it from your exchange to your own wallet or send it from your wallet back to an exchange if you need dollars. It's good enough for that. So it doesn't have to be what people, buy coffee for. And I don't think that Bitcoin's success over that next order of magnitude depends at all on the medium of exchange function getting better and better. I hope it does, and I'm a big supporter of Lightning Network in the way that it allows us to transact Bitcoin. In fact, most of my hand-to-hand Bitcoin transactions are in Lightning because that's what people like to use. That's what I like to use to receive. It's what they like to use to send. So Bitcoin is succeeding there. But going back to your question, which is where does the conviction come from? The conviction comes from the physical adoption, the participants that are coming into this asset class. It's not that I'm some proponent of the big guys getting all the Bitcoin. But that's the evolution. Actually, they will get more and more Bitcoin. And if you don't sell it, you will ride that wave. You don't have to be mad that they're coming in and buying. They're not stealing it from you. The protocol is not going from 21 million to 42 million to make room for IBIT. Just don't sell them your coins until you are ready to award those coins to the institutions. And if you do that, you yourself can drive the price up because it's hoarded and they can't get their hands on your Bitcoin.
And so with that, it's fun that people are mad that Bitcoin is developing as it's intended to do. Like I mean, it's an old meme, but people always said, "Oh, like the institutions will come, the game theory, the financial assets, like all of those." Like we heard that. I wasn't around for that, but from what I've heard is we all talked about that in 2013, 14, 15, 16, and now it kind of is happening, and people are mad. It's kind of like interesting to see how people are mad at strategy, at Seyr, at BlackRock, at all those financial institutions, and they're like, "Hey, but Bitcoin is peer-to-peer cash," and I'm like, it can still be that, and it can also still be used just as a savings technology or store of value or as an investment, however other people perceive it to be. You know what I mean? Like it can be a medium exchange for me and a store of value for me, and for someone else it's just a store of value, just a savings technology. So the one I feel like doesn't exclude the other one. So, and like I'm not taking a gamble of if we're gonna use Bitcoin as money or not, if fiat currencies go away or not. Like that's above my pay grade, I think. But you can already use it as money. Like I do accept Bitcoin. I do exchange Bitcoin here and there. But mostly I just use it to hodl it and put the number gap technology to work.
And Robin, let me also say, I mentioned IBIT and Harvard and, these institutions, but part of the conviction has to come from using it and understanding what it is. And once you've used Bitcoin, once you've sent it, received it, I think sending it from your exchange to yourself is step one. I think everybody needs to try this aspect of it, watch it move on the blockchain, get a block explorer, go to mempool.space, watch your transaction go from unconfirmed to confirmed. It's so powerful that when we think about Bitcoin's role today in a digital world of being a decentralized digital store of value and the lack of competition because no one has been able to create that decentralized replacement for Bitcoin. People have created many centralized competitors, replacements, but no one has achieved anything close. And the market cap of Bitcoin versus its crypto competitors suggests that insiders always dump. We see the same pattern on every chart. This is no one is talking about that anymore, which is the fundamental of it all. So I'm glad that you're asking these questions, like, where does your conviction come from? Actually, Bitcoin is the most special and unique asset class on the planet. That's an opinion. That is a strongly held opinion, but that is my opinion and the opinion of many others, and especially those that don't want to sell their Bitcoin. And Bitcoin and its lack of competition is one of the most important fundamentals, because if you believe that people need a decentralized digital store of value, a coin that they can trust, that won't be diluted, an asset that they can trust, then it's actually very easy to see Bitcoin's longevity. And then once you get into the longevity, then you can say, yeah, the network will probably continue to grow, participants will come in, and the market cap will increase over time.
And you said you also like the power law of Bitcoin, if that's right. Why does that power law make sense for you? Like, why is that a model that intrigues you?
I think empirically it is attractive, because if you look at the model and you look at the price history, you can see that. I've done the spreadsheet myself, where I've taken the power law numbers and I've gotten the day count and the exponent and done the math in a spreadsheet myself, and I can see that Bitcoin's expected compound annual growth rate today is around 40%, and over the next decade falls to the 30s and the high 20s. That makes a lot of sense to me. That's like passes the smell test, as they say. It's not calling for obscene returns, and of course it'll have fluctuations as it has in the past, but it seems like a reasonable expectation to have a 35% compound annual growth rate over the coming 10 years, or 5 to 10 years. So those are some of the numbers that, when I first looked at it, it passed the smell test. I built out my spreadsheet. But then I read a book recommended to me by Dr. Stephen Perrineau and Dr. Giovanni Santostasi, called Scale by Jeffrey West. And it helped me understand power laws in nature and how things scale at a power law. And when I think about Bitcoin as a network, I can now understand better that Bitcoin is a force of nature, and that the adoption path might follow other natural human networks, or even things in nature, but really human networks. And technology adoption in the past has also followed these types of power law waves, or power law patterns. So I would recommend Jeffrey West Scale, and I haven't read Dr. Santostasi's book, but I bought it here, the paper version. It's a big one. It's actually like a textbook, and there's a ton of charts and math in here. And actually, if I just flip this open here, you can see that he's also talking about things that occur in nature. So this is a chart that shows metabolic rates for different mammals, how much they eat and how much they weigh, and it follows a type of power law. So Bitcoin's power law is, to me, a sign that Bitcoin is a natural phenomenon that human beings were waiting for. And it is difficult to put into words why someone agrees with the fact that Bitcoin is following a power law, but I would try to summarize it by saying that Bitcoin is a naturally evolving human network, and those human networks do follow some mathematical patterns.
Yeah, Giovanni and also Stephen Bernard, they both have been on, I think, 2 or 3 times. I lost count. But it's really fun with them. They have really interesting analysis, and especially also Stephen Bernard, who goes into what is the perfect Bitcoin allocation if you just take Bitcoin, and he compares Bitcoin and US dollars, and how, I think, was it 72 or 75, something like along those lines, being the perfect allocation. So like when Bitcoin goes up, sell a little bit, keep it in US dollars. When it goes down, you have dry powder to like buy the dip and all of those things, which I found very interesting because my strategy up until now was just all in. Let's go. And he informed me on some new ways to think about it. I'm still not at the point where I would sell Bitcoin if it's very high. I just try to buy it heavier if it's down like now. But yeah, like they're very smart people, Stephen Paranoid and Giovanni Santos. It's like the two people that when they're on my podcast, I have to open my AI chatbot next to me and what is that like again, like what does that word mean exactly? It's like I feel not as informed when I talk with them usually.
Yeah, my episodes with Dr. Perno are the ones that I end up listening back because I don't I don't end up listening to most of my own interviews that I conduct because I'm the one that's listening while it's happening. But there are a few times where I have to go back and oh my god, I'm gonna need to listen to this again.
Yeah, great people. And also one thing I want to note here again, because we talk about those average returns, and I think it matters that we are currently at a lower point of Bitcoin. I don't want to call it the bottom because it's like, for me, impossible to gather where the bottom is, but like it's a lower point in Bitcoin. And so for people to think, it's very important for me to know, like if we are measuring Bitcoin's CAGR from today, it will be greater than the CAGR we would have from Bitcoin just 8 months ago. And so if you love Bitcoin, if you've loved Bitcoin 8 months ago, you must love it even more right now. But it's hard for people to comprehend that because the CAGR is so much higher right now than when you start with 120K instead of, what is it, 60K, 70K? I don't know today's price. So it's like, I still can't comprehend why people are not bullish when the price is down. It's just like this herd mentality. So I just wanted to reiterate that with the CAGR calculations.
Yeah, when it's down also, again, because Bitcoin doesn't have the cash flow component, owning it gets lost in translation. So, people are like, they want to own something that's going up. And if it doesn't have any cash flow, they have no cares because it's going up. Why do you need cash flow? It's going up. But if it's not going up, then where is the cash flow? Where is the protection? When interest rates go up, you still are collecting the coupon on the bond. When stocks are going down, you're still collecting the dividend. The company is still making money. It's still actually trying to grow its future revenue. But when Bitcoin is going down, there's nothing to stop. There's nothing to stop it. And there's nothing to make investors broadly say, yes, this is the time where I want this asset because it's cheap, because they don't know what cheap is. They don't have a discounted cash flow valuation model. They don't have an ability to say this is cheap. They don't know what realized price is. They don't know, they just don't know that Bitcoin, they don't know what it costs to mine a Bitcoin. They don't know whether miners are joining the network or leaving the network. And I'm mentioning all these things because these are all little ways we can fundamentally value Bitcoin. Like if you explain to someone, hey, it takes $3,000 in cost to mine gold, and so the price is 4,000, there's a delta there. But if the cost of mining gold goes up to $5,000, the price is unlikely to stay below that because the cost is higher. And they're like, yeah, that makes sense. What does it cost to mine gold? What does it cost to drill for oil? But Bitcoin, I mean, we are in a bubble. People do not understand what Bitcoin is. They have no idea what Bitcoin mining is. We're in 2026. I promise you, nobody knows. I'm about to teach a class at USC. It starts in 6 days. I will get 39 students in there. Their age doesn't matter. Not a single one of them will be able to tell you how a block is chained to the next block, and the difficulty target and SHA-256 and a number only used once that gets cycled out. Not a single person out of the 39 students that I will have in there will be able to tell me that. And so that's a sample size. And I know this because I'm a teacher and I get a new batch of students. Sometimes they're younger than 20. Sometimes they're older than 20. Sometimes they're around 30. Nobody knows it. Nobody comes in and it's like, oh yeah, I know how Bitcoin works. So Robin, how would they get bullish at 60? There's no way for them to know that it's cheap. They don't even know what it is. So you get the tourists that come in when it's going up, and then they leave when it's going down, but that doesn't make them knowledgeable about what they have participated in, and it definitely prevents them from buying it after it's gone down because there's nothing attractive about it.
I like going out, like sometimes outside of my because most of my friends are now into Bitcoin, or they get Bitcoin to a certain degree. And I meet with a lot of Bitcoiners with the conference and the podcast and all of that. And so it's hard for me to not be in the bubble. But every time I go out and people are like, oh, like, what are you doing? I'm like, oh yeah, I'm a Bitcoiner. I usually keep it casual like that. And then I ask them stuff about like Bitcoin. And I'm shocked how many people don't know that there's a cap to Bitcoin with the 21 million. Like that's something I thought is a very well-known fact in the world, but it's just in our world. If you go out in a normal world, people, did you see those videos where a guy interviews people on the street and he has only one question, and he has the question, what is one Bitcoin worth right now? And people are saying everything from like $2 to like 5,000, and it's like all way off from like the current price of when the interview was conducted. I'm like, they don't even have a clue roughly what the exchange rate is, which is such a superficial, like small knowledge. Like they have no clue, obviously, of the difficulty adjustment of how blocks gets, what a block size is, what, like how all those things, like the inner workings of Bitcoin work. And so,
and yeah, Robin, they don't even know when you offer them a 1 ounce gold coin or $100 bill, they don't even know to take the gold coin. They have no concept. And so, forget Bitcoin, dude. Like forget Bitcoin. You offer them a $4,000 gold coin. They could liquidate it for 3,600 in 8 minutes. You just Google the closest pawn shop and you're good to go. Or $100 bill and they make the wrong choice. So the masses are not going to be your indication of where we are or what we should be buying. That's why people need to do their own investment research.
100%. For people that are informed about Bitcoin, but they're like wanting to figure out, because you brought that question up, like how would they know if it's cheap? Do you look yourself at something like a 200-week moving average, at the bands of the power law? Like, what are you kind of looking at if you want to see we're kind of like overbought, a little bit oversold? Like, how do you determine that?
Yeah, so now I can plug what we're doing at the Bitcoin layer. So people should go check out, if you want the data, research.thebitcoinlayer.com. We have a beautiful data terminal that's free to try for people. At research.thebitcoinlayer.com, we have all of our frameworks in terms of liquidity, what makes Bitcoin attractive or not, and the conditions on Bitcoin from macro. And then we also have Bitcoin valuation metrics, trend valuation, and where we believe Bitcoin is on a behavioral basis and which stage of market behavior we're in. So we have our own Bitcoin trend framework and our own Bitcoin valuation framework. Now, this is all architected by Johan Bergman, who I know you met recently in Europe. Johan is based in the Netherlands, and he is our head of Bitcoin research at the Bitcoin layer. So we have built out quantitative frameworks for macro conditions on Bitcoin, and then endogenous Bitcoin valuation and trend metrics. These use on-chain technical, the 200-week, like you said, but realize it uses derivatives flows, ETF flows, things like the Coinbase premium, the difference between the price on Coinbase versus the spot price, which can be an indication of behavior. So we have a lot of different metrics that go into our valuation score. And then that valuation score tells me where we are. So right now we are in essentially the lowest quartile here in the valuation. I'll actually pull it up right now so that I have it right in front of me. Right now, our valuation is at 18. So that's the 18th percentile on a 1 to 100 basis. So very low. That means it's cheap historically. It's in the bottom 18% of where it should be. Now, that 18%, what is it relative to? Things like the 200-week or realized price or true market mean, other metrics that go in and give us this idea. So research.thebitcoinlayer.com to check out the data. If you want the analysis and the writing to go along with that data, I write on Mondays, Johan writes on Wednesdays, and I do a global macro update for our subscribers on Thursdays. This is where we get into what is the liquidity score, what is the valuation metric right now, what is Bitcoin's trend, is it moving, is it stagnating, is it going back to bullish or not? So we multiple times a week, we are in front of people with our analysis, but now we have this tool available to people. And if they want just the data, they can get that by itself as a standalone product now. The data is available to you 24 hours a day. Our liquidity metrics update at 3 a.m. Eastern every morning. And we actually have live prices on here as well from across global macro, and a bunch of charts to help answer those questions. Like, is it cheap? Is it not? How do we assess if it's a good time to buy or not? And forgetting Bitcoin for a second, what about macro? Is macro supportive or not? Is liquidity good for Bitcoin or bad? And if you are not even a math person at all, our subscribers are able to sift through all the numbers and get to really clear English word signals from us multiple times a week.
One last thing, because I think we only have like a few minutes left, is one last thing I want to get into with you is the strategy story. I personally was always not a fan, but I was just a neutral observer of strategy till December. And now I'm shifting more and more bullish, actually. I'm more and more like liking what they're doing and getting what they're doing. Not fully yet. Still observing, still trying to wrap my head around it, because I have to learn a lot of fiat things that I did not know about before, like preferred stocks. How do you look at strategy and what they're doing, the preferreds, and maybe even in extension to like what some other businesses like Strive and MetaPlanet are doing?
Yes. So Johan is conducting excellent analysis for us on Bitcoin treasuries. What I've been more like you, more of an observer. And in the early days, watching somebody come in, buy a lot of Bitcoin, issue debt to buy Bitcoin, leverage it up, that was interesting. That was something that I was watching as a mere development here, right? I have a layered money thesis. And so over time, you should want to own as much layer one money as you can to remove counterparties and to remove risk from your risk profile, to And when you remove counterparties, you are removing a type of risk, because counterparty risk is different than a default risk, for example. These are separate concepts. So I feel that Bitcoin has attracted these types of buyers because of its properties, and that's a good thing. Then strategy started to get really big in terms of its ownership. It's heading toward 1 million coins. It'll probably get there. That's very impressive. It's, approaching 5% of the total Bitcoin in supply. And so I understand why people have so much attention on it. Now, from my understanding, the economics of strategy they protect a catastrophic event in most of the outcomes. And I think that's something to what I think about the most when it comes to, is there a big risk of strategy? Well, what would Bitcoin have to go down for the catastrophe and the forced selling and the full unwind of strategy to happen? And the analysis that I've read and the analysis that Johan has conducted suggests that price is very, very low. And for this reason, I don't have too much fear about strategy having an undue influence on the Bitcoin price. We even see how much they bought, all the way from 120 down to 70. They were buying the whole way. So for the people that think, well, because strategy is buying, the price has to go up, that's nonsense. I mean, that's just not how markets work at all. Just because that was a lot of the knock on ETFs. Well, just because ETFs are coming doesn't mean the Bitcoin price will go up. Well, it actually did mean that, because you had new people that were waiting for that moment to come in and buy. But then what happened? The next year, the people who didn't sell to the ETFs at the beginning, then they sold the OGs. We had a ton of OG selling in 2025 and knocked the price right back down. Now most of the IBIT buyers are underwater on their position, like the vast majority of the market. I'm laughing, but it's not funny for those people. It is, however, amusing to watch the assumptions of narratives that dominate the market. So I think from a corporate finance perspective, that what strategy is doing is interesting, innovative, and potentially sound. I don't own MSTR myself. I don't own any of the preferreds, because it's corporate finance is not, it's not my cup of tea. It's not something that I'm trying to do. I'm trying to participate in Bitcoin as a first layer money, self-custody. That's very important to me. And for others, returns and the return profile might be more important. And so a more certain return path, such as 10 or 12% preferred dividends, is preferable to taking that risk, full non-counterparty risk, over a digital asset.
Yeah, it's an interesting play, but it's also a play where, like I say, that don't compare to Bitcoin. Just because you understand Bitcoin doesn't mean you understand what strategy is doing. And I'm trying since 5 months, 6 months to understand this whole thing, and I still don't feel confident to make a video about it and explain people like how it works and that. Like, I always make that metric. Like, am I confident enough to make a 1 to 2 hour long video on a subject and be ripped apart in the comment section because I made a mistake? like if I have that kind of confidence to put it out there, then I'm pretty good. But this takes hundreds of hours of research for me to get to that confidence to put like a 1 hour video out there, as you might know, maybe even like in the thousands. But it's not that easy to understand, I think.
And listen, I can be very honest. I went to the strategy headquarters last year in 2025 and tried to sell them my liquidity indicator to try to help them time the market better. And they didn't buy it. And so, just so people understand, like, I'm not here trying to tell you to buy MicroStrategy or STRC or any of these preferreds or digital credit companies. That's not what I'm doing. I'm actually trying to use macro to predict the Bitcoin price ahead of what they're doing, and to try to maybe even help them deliver more shareholder value. Because what needs to be said out loud about strategy is that it's just a big hedge fund now. That's fine, because what does a hedge fund do? Actually, this is really important to understand. What does a hedge fund do? They take in capital. That's your common equity. So they raise capital that they don't have to pay back. Common equity. It's a company. So a hedge fund takes in that starting capital. They have to pay back if someone liquidates it. But then they take that capital and then they go borrow capital. So they leverage existing assets, or let's say they take that basic capital, they go and buy treasuries, then they borrow 95% of the money against those treasuries, and then they go out and they buy other things. And when they see an opportunity, they go and borrow even more money to buy assets. And there's always a spread. What is their cost of carry and what is their carry? And I come from the fixed income world. So from a fixed income perspective, you have the borrow and you have the carry, and you have your net carry. And if you have a good net, positive net carry, and the risk is sound, you leverage as much as you can, because you're just building up that positive net carry and multiplying it on top of itself. So what is strategy doing? They get money in from the common equity, then they go borrow more money via fixed income or preferreds, and then they have to use that money to go invest in Bitcoin, and they have their net carry condition. And when it's not working out, they have to either sell Bitcoin, which they will probably end up doing again. Actually, if they don't sell their Bitcoin, they're crazy, because why wouldn't you try to sling it around if you're a leverage player? Like, it doesn't make sense. A hedge fund doesn't hold the assets when it goes back down. They try to sell them and then buy them cheap again. So it makes sense. If you think about strategy like a Bitcoin hedge fund, I think it will help you understand what they're doing. They're just a leveraged Bitcoin player.
Yeah, I think it's a very good point. We have an end routine in the podcast as we're coming closer to our end of time. We kind of touched on that, actually. The end routine of our podcast is where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And we kind of touched on it. I will still bring it up. Maybe you have some thoughts on it, some additional thoughts on it. Does Bitcoin need to succeed as a medium of exchange to also succeed as a store of value?
Yeah, the answer is nuanced, which is that I think it's already succeeding as a medium of exchange, just not in the way that maybe everybody wants it to, or in the rapid, meaning instantaneous fashion that people might want. It has Lightning Network. It has a blockchain. They both work well. I use both of them. And so I don't think it needs to be more of a success as a medium of exchange to reach that next level.
It has enough medium of exchange to be an amazing store of value. Really cool. Thank you so much, Nik Bhatia, for being on the podcast. Before I let you go, where can people find you, ask you questions, reach out to you, and see all the things you're doing?
Yeah, thebitcoinlayer.substack.com. You can sign up, and we have a free macro newsletter that goes out on the weekends. And with that, you can start to get familiar with our research. And we have links to our podcasts and videos via our newsletter. So thebitcoinlayer.substack.com. And I appreciate you having me on, Robin.
Awesome. Thank you so much, Nik, for being on the podcast. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. this content is for educational and entertainment purposes only and does not constitute financial advice.